Hi everybody, Alex Deploy here from Expert Forex. This is part 2 of the previous video that helps you find better make money day trading settings, and we are going to continue the process of the previous video. Please watch that video first before moving on to this one. Okay, so the Aussie is actually positive. It's had a profit of $250 and two losses of $100, so it's $50 up. And again, we have this situation: how could we improve these results? And by now you should be able to notice things quite nicely. Here you can see it's a with a trend result trading technique. It buys into a trend, buys into a trend, and actually that was a trend, so it bought into that particular trend. Now, what should be almost obvious to people that have watched the previous one is that we start asking, is this the best time to trade this particular one? Now, there's two observations that we can make here. Is that if we had started, and the trading started at 6 o'clock, 6 o'clock and 6 o'clock. So the trading started at 6 o'clock in the morning. So the visual observation is, there are two that I can see immediately. If we move the trading a few hours earlier to start over there, would it have been better? So that would have been better. That would have been better, and possibly that would have been better. The buys would have been entered a lot earlier, and you may not have had this stop out. So moving it a little bit earlier is a possible solution. I'm going to just say move 1 or 2 hours earlier. And then the next observation I can make here is, what about moving it a few hours later? So again, if we start, let's say 3 hours later, so we start around about there. Look at the trend that gets caught. We start a few hours later there. Look at the trend that gets caught. We start a few hours later there, and look at the trend that is possible. So again, so we say from a visual point of view, what about a few hours earlier or a few hours later? So the time of day starts playing a really important role in these kind of trades. Okay, so it is reasonably profitable. So we maybe those are refinements we can make. But let's now that we know a little bit more, let's see when these trends start. So here's a good trend that started here. That was 9 o'clock. 9 o'clock over there when that trend started. And then if you go down here, there was a trend later in the day at about 1500 hours. So 1500 hours is the other trend starter. And then round about there was a small little trend at 2 o'clock. And then round about there was the start of a trend at about 4 o'clock. And then here was the start of a massive trend at 9 o'clock. And over here, there's the start of a massive trend round about 12 o'clock. Here is the start of a good trend at round about just after 9 o'clock. And let's roll it back a bit. Let's see. There was a really nice trend start that was round about started pointing up at about 7 o'clock. Okay, and then there was a trend start at about 1400 hours. And that's about it. I think that's 9 o'clock over there, and that is 4 o'clock. Okay, so again, the number 9 jumps out. So round about 9 o'clock is when these trends start. And we've been starting trading at 6 o'clock, a little bit early. So again, the visual observation says that maybe we should consider trading a little bit later in the day than what happened here. The other thing, again, we've got a very slow moving average and a fast one. Maybe we want to get into these trends a little bit faster than is currently being signaled. Maybe we want faster moving averages there to get us into the trend a little bit faster. Let's just have a look. Is there anything else we can see? Time of day, direction. Again, those were buying very late into the trend. That's buying very late into the trend. That's buying quite late into the trend. So we should also could consider the current settings as a reversal strategy. We need to do a bit of work on that reversal strategy. If we had reversed the settings, we could have most probably got a good reversal strategy going. Not guaranteed. So in other words, we'd be selling there and going down, we'd be selling there and going down, and we'd be selling there and going down. The other thing is there's a reasonable amount of open trades there, so our lot sizing is becoming a little bit better. There's only 4 there, so lot sizing appears to be fine. MAs can be faster, and our risk and return, $100 loss compared to a $250 profit, is reasonably good. So okay, so that's the review for that particular one. You can see we're moving a little bit faster now. The next one is the yen. Okay, so here's the yen. I have added the period separators so that we can see one day from the next, and we can see that the yen started trading at around about 6 o'clock or 5 o'clock every day. Okay, so and that it made 3 losses. It is trending quite strongly, and it was, what was happening here, it was starting too late. You can see there's the trend. It started selling in the direction of the trend, but too late. There's the trend. It got selling into the direction of the trend. It's too late. There's the trend down. It got selling in the direction of the trend, but too late. If it started earlier, it would have been a little bit more successful. So the first observation is start earlier. So if you start over there, it would have been better. Start over there, it would have been better. And if we start a bit earlier over there. So the visual observation is start earlier. And if we had started earlier, that would have been a sell, that would have been a buy, and that would have been may not have been a sell. So what we are saying here is that maybe the moving averages are too slow, or actually too far. They could potentially be too far. So let's have a look at the various strategies that you can take. So if we look at this moving average here and we just turn it into 100, for instance, then we have this moving average going up there. So it would never have sold over there. It would have bought over there. It would never have sold over there. So in other words, this is a way of forcing your trades to always go with the trend. So you use a very slow moving average and you use a fast moving average, and only when they align, like over there, will you trade. And then the question here now is, so that's one approach. Should we change this into a long-term moving average technique? So that's just a question, and obviously that comes from visual observation. All right, so that's the one question that we need to ask. The other one was, do we need to start earlier? The other one is, look at the number of transactions. There's like 12 transactions there. There's 10 there. There's must probably about 7 or 8 there. So we're saying there's too many transactions. Is it? Are the losses being incurred because the lot sizing is too small? In fact, the lot sizing could be too small, and therefore... Okay, so let's have a look at when the turning points in the market happen with the yen. And again, there's a turning point over there, and that was around about 12 o'clock. There's a turning point over there, so that's 4 o'clock, so it's 12 o'clock, 4 o'clock. Then let's have a look Here's a turning point here. That's 1800 hours. There's a turning point over there. That's 8 o'clock. Don't want to go into the trend. There's a turning point. That's 11 o'clock. 11:30. There's a turning point. That's around about 1300 hours. So overall, the yen gets bumped around by the market quite a lot. There's a turning point there. That's 10 o'clock. So far, we haven't had any consistency about when the yen starts turning around. So we must just note that, and we need to deal with that, because let's just take it out of the trend and see if there's consistency in that. That's 3 o'clock. That's 11 o'clock. Okay, so still can't get any consistency, although the period from 10 o'clock to 12 o'clock, or even 1300 hours, seems to be the period when there's quite a bit of alignment. So what we're saying is, and I'm just going to do this for a few days, so that's from 10 o'clock to from 10 o'clock, 10 o'clock to 1300, there seems to be, let's just see, 10 o'clock to, seems to be consistent, 10 o'clock, yeah, that's consistent, 10 o'clock. Okay, so it does look like 10 o'clock for the next 3 hours looks like, just so far, my evaluation. All right, so there's a little bit late, but it did, in the end, it did look quite good. And then let's just have a look, and we're actually heading for that time right now, but the moving averages are not pointing in the same direction. That's why, again, we need to decide whether we want to have sensitive moving averages or not. This is just about to start trading right now. In the next, so it won't trade because the moving average is pointing down and that one's pointing up, so no trading will occur for a while. Okay, so I'm just going to note here 10 o'clock, just do more work on the 10 o'clock time. Let's see, when was that? 10 is 11 o'clock. Okay, so that's not bad. Okay, so that's the yen. The lot sizing appears to be fine. The direction, it was selling, and that's why I've put in that yellow one, and it shouldn't have sold there. It only should have sold, it should only started buying there. That one would have bought. That wouldn't have sold there, it only would have bought up there. So what I'm saying is that consider a long moving average to filter out the against the trend trades. So that's the yen. So let's move on to the next one, which is the euro yen. Okay, so here's the sad story of the yen. As you can see, loss, and it looks like we've got the same situation. It is, see the trend going down there. It's opening the trades too late. Trend going up too late. Trend going down too late. The one question is, should we reverse the strategy? Certainly, boom, that would have been a reverse strategy. That would have been a great reverse strategy. That could have been a good reverse strategy. So we put a question mark, reverse strategy, on the spreadsheet, and then we say, okay, how could we have improved this? Now, it's almost obvious here. If we had started 2 hours earlier up there, we would have caught that nice downtrend. If we started 2 hours earlier down there, we could have caught that up. And then if we started 2 hours earlier, we could have caught that downtrend there. So certainly from a visual observation, 2 hours earlier is the way to go. But it would only work if the moving averages are faster, because 2 hours earlier, the one's pointing up and the other one's pointing down. You don't want that moving average to be that different, so you might want to just reduce it. And there we are. So we get into the trends so much earlier, 2 hours earlier, 2 hours earlier, 2 hours earlier. So there's an immediate fix for the euro yen. In fact, that turns all those losses into profits and is not a bad idea overall. Okay, so let's put the period separators in there, just give me some orientation. And let's see if we can find a rhythm to this particular market. Okay, so we'll start over there. All right, so there's a good start there. 1600 hours, 1700 hours, 1800 hours. Well, there's 1500 hours, so that's the start of a trend. It's 1400 hours, 16, 10. Right, so let's look at 10. Yeah, 10 has a nice little trend there. Yeah, there 10 again, a little bit of a trend there. There's 10. All right, 10, a nice little trend there. So the hour of 10 seems to be not a bad idea. So all right, so let's have a look at the opposite now. So we said, why don't we move it 2 hours earlier? Now what happens if we move it 2 hours later? So 2 hours later over here would partially catch that trend, but reverse it, must make a loss. That one will catch the buys, and it might go positive, and that one will catch the sells and go. So 2 hours earlier or even later, go and have a go and test those and see if they are better. The number of lots, there's a lot of open deals there, so the lot sizing appears to be good. If direction changes would have made it might not have worked there, it would have worked there, and it would not maybe have worked there. So maybe direction change isn't an option for this particular one. Okay, so I think that gives, I've already noted what I need to do there. Look at the reverse strategy, look at a 2 hours earlier, 2 hours later approach, and we'll just move on. And the next one is the Euro CAD. Okay, so let's have a look at what's happened to the Euro CAD. It's made a loss over there, and then it made a profit, which put it into a positive situation here. And it is with a trend. Here you can see it's selling into the trend. Here it's selling into the trend. Again, a little bit late, and then there it was buying into a trend, but also a little bit late. So we have almost the same. Can you see how patterns start repeating themselves? What we're saying here is, how about starting 2 hours earlier or so? 2 hours earlier would have put those buys positive. 2 hours earlier would have put those sells positive, and 2 hours earlier would have put those sells more positive. So that's one approach. What about, let's have a look at so the 2 hours earlier and 2 hours later test is actually something worth considering at this stage. So if we had gone 2 hours later, there's a nice strong buy trend. If we had gone 2 hours later on this one, there was a nice sell trend. If we had gone 2 hours later, that would have been part of a sell trend over there. So 2 hours earlier, 2 hours later seems to be a good test to use. Let's see if we can find some trend changing time. So there's a trend changing time. That's 4 o'clock. There's one at 10 o'clock. So I'm just going to write these down. 4 o'clock, 10 o'clock. There's a trend changing time, 1400 hours, and then there's a massive one at 1600 hours. Okay, so in that one day it had a lot of trend changes. I'm not going to worry about that one. There's a good one there again. 3 o'clock. Then it changed at 5 o'clock. 3 o'clock. 5 o'clock. And then here was the good one, which was at 8 o'clock. And then there was a good change. There was 11 o'clock and Then here's the really good one, 1600 hours, and then it flowed right down, and then right about here was another really major change, which was 10 o'clock, and it ran all the way up. There was a small change there, late one. So not really a very consistent currency. There's a change at 6 o'clock, and there's a change at 1400 hours. So now the Euro CAD does not appear to have really a very fixed rhythm to it. The best we can do here is 2 hours before and 2 hours later, the same as the previous one. The fact that it had losses like it did also asked the question, should we have used reverse strategies? No, because it's had a positive day, we wouldn't ask that question. So again, this particular currency is a little bit unpredictable in terms of the start of trend times. I can't see any consistency in the start of trend times for this particular currency, but again, one would have to study it over maybe a month or so to build some kind of pattern. If you can't find a pattern, just move on to the next currency. That's the best way. Don't try and over-analyze these currencies. So that was the Euro CAD. All right, we're almost at the end of the FTMO ones. All right, so we're looking at the pound New Zealand. Let's see how that one went, and that seems to be daily loss, daily loss, daily loss. Okay, let's see what we can do. All right, so the first observation here is, and let's make it a little bit bigger, it's against the trend. So it's selling into an uptrend, selling into an uptrend, buying into a downtrend. So the first reaction is we should have reversed the direction. So instead of selling into an uptrend, you buy. So we go with a trend basis. And the second test, remember, the 2 hour before and 2 hour after, could also be the 1 hour before and 1 hour after. Certainly would have worked very well if we had reversed the direction. If we started a little bit earlier, we caught that beautiful trend. Started that one a little bit earlier, could have caught that trend up there. And started that one, we would have gone sideways for a while and then caught it. So again, the 2 hours earlier and 2 hours later test is a very good one, and certainly one worth considering for the next week's trading. All right, so let's have a look then at some pattern recognition. And I haven't put the moving averages on. Let me do that. Okay, I've put the moving averages on, and again, you know, it's a balance here, because if we were to say we wanted to trade a little bit earlier, there wouldn't have been trades going in these particular areas. If we had made them a little bit more sensitive, we would have entered the trades a lot earlier. There was a period here where there's no trades because the one was pointing down, the other one was pointing up. So you've got to consider the sensitivity of the moving averages. Do you want the trades to start earlier, or do you want them to start later, or do you want trades to only take place in one direction or the other? Therefore, you use a very long second moving average. So that's the way you change the strategies, to either be quick and get into the trends, or very slow and only trade with the trend. So in this particular case, let's just go back to the when do these trends start question, and here's a definite trend change, and that's at 9 o'clock. And then there was a second one here, which was at 1500 hours, starting to be more in line with, and then there was a trend change at 1900 hours. And then coming down here, there was a trend change at 2 o'clock. And then over here was a trend change at 6 o'clock. And then it just continued on, and then there was a trend change at 1500 hours. And over here's most probably the trend change that was at 4 o'clock. And Then here was the big one at 9 o'clock. And then here's another one at 1300 hours. And then over here it's at 1800 hours. Okay, so we're getting a picture here, but let's continue with this. There's a definite breakout at 3 o'clock, and there's a new trend at 9 o'clock. Okay, so 9 o'clock over there seems to be a mixture here, but 9 o'clock appears to be the most consistent time for trend changes. There's one for 12 o'clock, and then over here's one for 1500 hours. Okay, so in this particular case, 1500 hours and 9 o'clock seems to be the times for trend changes. And maybe that should be considered for our next strategy other than this particular one. This one has made 3 losses in a row, so we've got nothing to lose by changing the strategy that way. And I'll only make these changes over the weekend for next week's trading. And it's about to start trading pretty soon. Here's the trading zone that it's heading for. Okay, so that completes the FTMO batch of currencies. We've reviewed them. I've made my notes. I'm now going to consider those notes for changes before trading starts next Monday. Now, I think you'll agree with me that we've learned a lot from this exercise. We've developed this 2 hour, 3 hour, 2 hour earlier, 2 hour later test. We've found reversal times that need to be looked at. We've actually we need to consider some of the moving average settings to be tighter or looser depending on the currency we're trading. We also identify some currencies that are so inconsistent that they're almost not worth trading. That's another view to take. And we've also seen that some of the currencies, the lot sizing was too high, which resulted in them only having 2 or 3 trades before being stopped out. So there's a lot that we've learned so far. We're now going to move on to the IG group of charts. So what I'm going to do is I'm actually going to start a new video for IG, and we can do those 12 charts in one go. I think the more you do something like this, and as you've noticed, the faster it starts to happen, and the faster you can actually see patterns. And after you've done this a number of times, it will become second nature, and you'll start finding settings that are really a lot more robust for your make money day trader. So let's move on to part 3 of the series, and that's going to be for testing the IG platforms that were traded. There are 12 currencies that we need to look at on those platforms.